Welcome to Money News. I'm Kathleen Walter. With us today is Kathy Fettke, founder and CEO of Real Wealth Network and one of Goldman Sachs' 100 most intriguing entrepreneurs. And Ms. Fettke, thanks so much for joining us today.
Thank you.
The S&P Case-Shiller Index reports that U.S. single-family home prices rose in March, racking up their best annual gain in nearly 7 years as the housing recovery continues to provide a source of strength for the economy. Do you think the housing recovery is built on a solid foundation, or are rising housing prices a bubble about to pop?
It's a very good question that we're keeping a very close eye on. I think there are parts of the country where there is a bubble happening, and there are other parts of the country where you can still get fantastic deals. First-time home buyers can lock in low interest rates and still low home prices and do very well. Mm-hmm. But you got to be careful of the areas where that are investor focused. Too many investors in one area.
So what areas of the country do you like and what areas do you not like right now for investing?
It's really the headline states, the states that had so many foreclosures that investors from all over the world came in and bought up property, including the hedge funds, of course. Wall Street has dove into areas like Phoenix, Vegas, parts of California, Riverside, Sacramento, and parts of Florida. There's just been too much investor activity, and we're seeing prices go up as much as 2% every month, even more than that.
Now, U.S. home builders are concerned that limited land and rising costs for building materials and labor will slow sales in the short term. Do you see the housing market picking up more steam or once again stalling?
Again, it just depends on where you are. There is definitely a shortage of housing in those areas that the hedge funds have come and bought. Again, the headline cities. And there is a shortage of housing, which again is shocking. Part of the reason is that some banks are just not foreclosing. They've sold the notes, keeping those homeowners in their homes and maybe modifying the loans. So what we thought was this big shadow inventory isn't really going to hit in those areas. So that kind of surprised a lot of people. Therefore, builders weren't able to keep up with demand. There is a shortage of housing, and that's going to cause home prices to go up significantly, drastically in some areas, and is creating a bubble. You've got to be careful. Don't overpay.
Okay, Yale University economist Robert Shiller, Wellesley College economics professor Carl Case, and David Blitzer, managing director of Standard & Poor's Index Committee, have warned that we shouldn't rely on housing to support a strong economic recovery. They say among the obstacles are a low level of new housing starts, an unexpectedly slow migration of so-called shadow inventory onto the market, and continued difficulty for buyers to secure financing. Do you agree with that?
Well, I don't think it's ever good for our economy to rely on one industry to bring us back. I mean, we're the United States of America. We've got to be innovating. That's where our attention and focus should go, in my opinion. Mm-hmm. However, we're seeing that now that builders are back, they're needing to hire people. And the interesting thing is they're having a difficult time finding construction workers right now because so many left the business.
Now, millions of homeowners remain underwater and a sea of homes are in the foreclosure process. You talked about a bubble earlier. When are we going to see this bubble, and how much of a threat is this to housing recovery?
Well, it's interesting. I was talking to a group of investors in the Sacramento area. And, one was an old-time real estate agent and investor. She knows the market. She knows what she's doing. And she confessed, I know I'm paying too much for property, but I'm doing it anyway because I'm afraid there won't be any left. Now, when we are driven by fear, it doesn't usually work. There will always be more property out there, maybe just not right now. So, this is the problem. One way you can tell if you're overpaying is if the average income of the area is, the average home price needs to be no more than 3 to 4 times the average income.
So, Kathy, last question for you. What is the biggest economic risk to derailing any housing recovery in your view? Is it political dysfunction in Washington, a jobs market struggling to gain permanent traction, or just general global economic uncertainty?
Well, the biggest risk I see right now is investors, big hedge funds coming in, not really understanding values, paying too much, driving prices up. That could create another bubble and then another crash, of course, and that would that would hurt housing. If we could just get the first-time buyers back in the market, they're having a hard time competing. They're the ones who are going to be able to gauge value a little bit better because they'll know what they can and cannot afford.
All right, Kathy Fettke, founder and CEO of Real Wealth Network. Thanks for joining us today.
Thank you so much.
And thank you for watching Money News.